Welcome to a case study on Euro USD, highlighting the trade that I took yesterday for 5.5R. So this position was taken on the hourly and lower time frames. The idea was we were following the substructure into a swing point. So if we just look at this current market, we can see we have lower lows and lower highs, lower lows, and what we're looking for now is the formation of a lower high. Now, as you can see, if we look at the previous leg of downside movement, the market did come into this little efficient area. So it filled all of this inefficiency, and while we didn't pull up into the top inefficiencies, we did at least retest an efficient price zone before moving down. So if we look at where price is now, there are no real efficient price zones to this point until around 1.17720. Okay, so what I was expecting is that the market could very likely continue a push up and trade into this point before we can then begin looking for downside movement. So that was phase one of this trade. Now, as we can see, within this substructure move, which is a lower time frame uptrend, we can see that we have higher highs and higher lows consistently, higher high, higher low, all of these regions being retested. Now, when we came into this point, I did see two equal looking lows. So you could therefore, look for the possibility of the market moving lower. However, if we go to the lower time frames, we'll jump to the 15-minute time frame for now. We will see, after just pushing through that low, wicking through a very slight amount, we actually then made a bullish bounce, which actually broke some structure points. Okay, so if we grab our demand zone tool and mark on this clear demand zone, you'll see that we have actually respected that level. We did wick through, but this obviously was all rejected. So this is a nice indication that buyers are coming in at this level. So using discretion in areas like this is how you're going to find trades where you may not have found them before. Obviously, as I've spoken about in previous videos, if a demand zone or a supply zone is wicked through a few times, but then there is a significant shift in the trend, that's not actually going to tell us that it's a solid break of structure. So the demand zone was retested, the wick through obviously rejected, and then a push to the upside, which if we look on the 10-minute, has clearly broken, we'll go to the 5-minute, has clearly broken this structure point here, which is obviously the overall substructure swing high that we wanted to see broken. So all in all, this trade was lining up for something that looked pretty nice. Demand zone retested. If we just refine the demand zone to its lowest point, the demand zone was retested, and then an impulsive move came from that, and a structure point was broken. So what I actually looked for after seeing this bullish break of structure was, first off, a 5-minute demand zone. Now this was a very clear point for me, because as we can see, we had our first move up, no break of structure there, and then this is where the strength built to actually form this impulsive move. So this is the target buying point for me on my trade. What I actually did then was place an order on 1.77330, because if you realize here, we do have obviously an impulse down, lower low, lower high, lower low, higher high, and then we're looking to buy from the higher low. So it is exactly in line with what we do look to see for a lot of our trades. So what we're looking for now is essentially, this next movement to come down to then buy from. So I went ahead and put an order on here at 1.7330, just towards the top of the demand zone if I really refine that. And then for my target, I was looking at a 7 pips stop, and then obviously I was looking for that 772 level for my target, which is just into the supply zone overhead. So what this leaves us with is a 5.57% position at 1% risk, and it's a very, very conservative position as well, because as you can see, I've cleared the lows with the stop. It would have been possible to, move a tighter stop in, but when we have a move like this, where we've actually gone and pushed through the demand zone and seen those rejections, it's likely that we get wicks. It's likely that we're going to get some choppy price action here. So in my opinion, it was best to go for a slightly lower risk versus reward and just roll with a slightly larger stop to make sure that I got the trade without getting stopped out. So here we go then. If we see how the trade plays out, we will indeed see we get a nice push down, retest of that zone, A wick pushed through it again, as I mentioned. So obviously, as we saw this happen previously, it's likely that there is quite a lot of selling pressure, even though the buying pressure is overpowering it. So it's actually best in this example to just go with a more conservative stop. I mean, you can always go with more conservative stops like this because it's going to increase your win rates. It just reduces the risk reward a little bit. But as you can see, we were tagged in. A little bit of drawdown there, almost, well, potentially a third towards the stop loss. But then from there, we moved to the upside quite dramatically. And then we consolidated. As we mentioned, there was a possibility to rebuy for a scale in at this point. Never came through. No complaints from me though, because we did actually then move and take out the take profit. So that was a 5.5R position that I took yesterday on Euro USD. Very simple system approach. Obviously, we were looking to fill the swing structure, trade into the hourly supply zone, and we know that we do have room to actually move into that level because we haven't gone and fulfilled that level yet. And the market is actually moving in an uptrend on the lower time frames, hourly and below. So what we looked for was a simple sweep of these lows here to then trade into demand. And this would not have been a good trade, and this would not have been a trade I would take if we didn't get this large impulsive bullish move that broke that previous structure point. But when I see this, an impulse this big coming out of a demand zone and breaking previous structure, I am more than happy to execute a position so long as my trend bias lines up with what I'm looking for, which obviously in this case it did. So that is the Euro USD trade that I took yesterday. It was a very nice position. Shame we didn't get that scale in. Shame we didn't get that secondary entry. But it still was a lovely position indeed. So thank you for watching. I hope you've learned a thing or two from this video, and I'll see you over in the server.